Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if that fancy financial jargon is hiding a genius or a genius at hiding money. Today we are diving into a filing from Teladoc Health Incorporated, and it looks like they are making some changes to their employee incentive plans, which sounds a bit like adding more treats to the company cookie jar. Before we get into the nitty-gritty, if you like getting insights from these often confusing corporate documents, then make sure you are subscribed. We also have a Discord community linked in the description below, so join us there to keep the conversation going. Alright, so what is this filing all about? Basically, Teladoc Health Incorporated, you know, the folks who let you see a doctor virtually, they have updated a plan they have for their employees. This isn't a big financial report with all the numbers for the quarter, but it is more about how they keep their team motivated. They are increasing the number of company shares they can give out to employees under what they call their 2023 Employment Inducement Incentive Award Plan. Think of it like this. The company says, hey, if you do a great job, we can give you some company stock. Well, now they are setting aside more stock to do just that. So they originally planned to offer a certain amount of their company stock as rewards. Now they are bumping that up by 1,780,000 shares. This means the total number of shares available under this particular reward plan will now be 7,280,000 shares. Why do companies do this? Well, it is a way to attract and keep talented people. They want their employees to feel like owners of the company. When employees have stock, they are more likely to work hard to make the company's stock price go up. It aligns everyone's interests. The filing makes it clear this amendment is solely to increase the number of shares. They are not changing the rules of the plan itself, just giving themselves more shares to hand out as incentives. This particular plan was originally adopted without a vote from the shareholders. That is allowed under certain rules when it is just for employee incentives like this. Now, Teladoc Health Incorporated is a big player in the telehealth space. They were one of the pioneers really. They let people connect with doctors and specialists using their phones or computers. Especially during the pandemic, this business really took off. People love the convenience of not having to leave their homes to get medical advice. They offer a wide range of services from general practice to mental health and even chronic condition management. It is a model that definitely has a place in modern healthcare. The shares they are talking about giving out are their common stock. This is the standard stock that most investors buy and sell. These shares are traded on the New York Stock Exchange under the ticker symbol Teladoc. When the company gives out more shares for incentives, it can have a couple of effects. On one hand, it is a great way to motivate employees. On the other hand, it can dilute the ownership stake of existing shareholders if not managed carefully. This means that each existing share represents a slightly smaller piece of the company. However, the company is increasing their overall value and potential growth by attracting top talent, which in theory should offset any dilution. Now let's look at this from a broader perspective. Companies like Teladoc Health Incorporated operate in a very competitive industry. There are many other telehealth providers, and traditional healthcare systems are also investing in their own virtual care options. Offering attractive incentive programs can be a key differentiator in hiring and retaining the best people who will drive innovation and service excellence. It shows that the company is thinking long-term about its human capital. Looking at the bigger picture for Teladoc Health Incorporated, they have been through a lot of growth and also some challenges. Like many tech-focused companies that saw a surge during the pandemic, they have had to navigate changing market dynamics. The demand for telehealth remains strong, but the landscape is evolving. Successfully managing their talent pool through programs like this is going to be crucial for their continued success. So what is my take on this filing? It is a fairly straightforward update to an employee incentive plan. It signals that the company is committed to rewarding its people and believes that providing equity is a powerful tool for alignment and motivation. There aren't any dramatic financial revelations here, but it is a good indicator of how the company is thinking about its internal structure and its people. The key will be how effectively these incentives translate into sustained performance and growth for Teladoc Health Incorporated. Alright, that is our quick look at this Teladoc Health Incorporated filing. What are your thoughts on using stock as an employee incentive? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate decoded insights. And don't forget to join our Discord community linked in the description. Thanks for watching. See you next time.